I'm Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Tuesday, December 4th, 2012. USDA releases its next monthly crop report 1 week from today. Market analyst Paul Burgener joins me to discuss what to expect. Well, not much is usually what happens with this report. The government won't update its U.S. production estimates for corn and soybeans until January, when changes to domestic consumption are also more likely because grain stocks data is also published. USDA could make some changes to its export forecasts, but most of the attention should focus on what's happening around the world. That's especially true for Argentina, which was hit by more heavy rains this week already, with more showers in the forecast. 52.4% of the corn crop in the country was planted last week, 12.4% behind 2011's pace, and it appears production potential could be down 40 million bushels already. It's not a lot in the big scheme of things most years, but after the U.S. drought, end users are counting on every bushel they can find elsewhere. USDA's estimate of world stocks could be down by 80 million bushels, but few changes are likely to the U.S. estimates until January. The agency may cut its forecast of U.S. exports due to the slow pace of sales. Inspections reported Monday are down almost half from last year's, but overall carryout may go up to 680 million bushels, an increase of 33 million from November. Paul, corn's been well supported all fall, but has had trouble breaking out of its trading range. My model still shows potential for $8 plus corn. Do you think we can get there after the January reports?
You know, Bryce, that $8 number is one of those magic numbers that's out there, and it seems like every time we get up into that range, the market finds somewhere else to go or something else to do. And I think that $8 range is out there. I think there's some things that will have to fall in place to get there. Obviously, the South American weather is one of those issues. Some continued buying out of China, I think, is going to play a role in that as well. And then I think the other question is, what does the wheat price do to go along with this? If there's not really a good substitute out there, maybe that $8 number is a number that we really challenge and get to. I know, and I think for a lot of our farmers, one of the things they're going to have to think about is, do I want to hold for some $8 corn after the first of the year, or do I have some tax planning that I need to do and I need to get that sold, and then maybe look at doing something with some calls if I think I need to really take advantage of a run up after that January report.
Yeah, certainly some short-dated call options could be an attractive alternative for producers who do have to sell cash for tax purposes but want to stay long the market. Soybeans looked like they were ready to rock and roll last week, but after challenging chart resistance, January futures were unable to break through their 200-day moving average despite all that rain in Argentina. Lost corn acres may wind up in beans in Argentina, making up for any ground hurt by flooding. Plus, the rains have helped potential in Brazil overall, though parts of southern Brazil have received just 60% of their normal rainfall. World stocks could be down by 40 million bushels or so, but the big question is whether USDA will respond to the red-hot pace of commitments from the U.S. Though new bookings have slowed recently, record early sales are leading to a record pace of shipments. My guess is that it's still too early for USDA to change its forecast yet. Instead, I think the agency will wait for final production numbers to be in, along with another month of crush data, before it rejiggers its balance sheet. That would keep ending stocks at 140 million bushels. Seasonal trends favor higher prices into January's USDA report, but extending rallies will take either South American weather problems or big Chinese purchases. Is there anything else that could move the market, Paul?
Well, you know, I think as we look forward, we've seen a little bit of hesitance for the market to do much right now because of that underlying fiscal cliff out there, and I think that really is is causing some hesitance in the market. We'll have to see what happens with that. If something comes up and Congress actually does step forward and make some decisions and do something between now and the first of the year, then I think there might be some real opportunity for some strength in the soybean market. If we do go off that fiscal cliff, then there's some issues that we really need to take a look at in terms of what happens to the equity markets, and does that then pull the commodity markets down with it? If it does, how long does that carry out? Recognizing that we're still awfully tight with supplies. So we know we've got some concerns there. The length of that concern is really what we're looking at. If we do go over that fiscal cliff, there's some discussion about reduced crude oil use, reduced gasoline use. That then impacts the corn side, the ethanol market, rolls back into causing some carryover into the soybean market. So I really think that the next 30 days really does play a big role in what happens to the bean market.
Yeah, going to be a tough time to be on vacation. No major changes are expected in USDA's wheat forecast either. Exports have been weaker than forecast, but U.S. prices finally appear to be competitive on world markets, at least for soft wheat. But that's a bit of a catch-22, however. U.S. prices won most of Egypt's snap tender over the weekend, but only because they fell sharply on Friday. Today, French wheat was only 2 cents a bushel more expensive than originations out of the Gulf, after accounting for freight and currency adjustments. U.S. hard red winter wheat remains expensive, but other sources are drying up. Ukraine appears to be out of the market, and there's not much Russian wheat left either. Argentina's crop is only 25% harvested, so this week's rain should cause further problems with quality there. Australian production could be a little better than originally expected, however, after drought hurt the white wheat crop in Western Australia. But the big story for wheat remains what's happening on the plains. Forecasts are turning a little wetter, at least for the northern half of the hard red winter wheat belt. But the long-term drought still looks locked in place. Is the new crop story enough for the market right now, Paul?
Well, I think sitting out here in western Nebraska, there's two really bad news pieces out there. One is the drought. The other is the Wisconsin-Nebraska game last Saturday night. And I'm not sure which of those is worse right now, but in the long term, I think that drought's going to be the key impact. The weather's terrible out here in terms of wheat production. It's been warm. It's a little bit breezy. Humidities are low. We're just using up what little bit of moisture is there. The wheat's not really gone into dormancy because it's been warm. So we're really struggling with this weather. And the other thought is getting back to normal weather this time of year. This is really our dry time of year anyway. So normal is not a catch-up time for us. So it looks to me like the hard red winter wheat crop is at some risk. Now, the other side of that is this crop is one that dies several times a year. The agronomists will tell you that it comes and goes multiple times in a year. So the right kind of weather in the spring could really help this out. But I think right now the market is very much feeding on this, and rightfully so. I think there are some opportunities to make some sales. Again, watching what your coverage is with crop insurance.
Well, thanks, Paul. I'm headed to your part of the world for the rest of the week for some panel discussion, so I hope nobody's too mad about that Wisconsin game on Saturday. We'll be back next week with a look at the USDA report and the rest of the news shaping the market on the next edition of The Buzz.